Welcome back, everyone. Hope you've enjoyed the beautiful fresh air and the snacks outside. I'd like to extend a special welcome to some new folks that have just now joined us in the room for the remainder of the program, specifically some more startups and Sapphire Ventures partners and allies. Thank you for being here this afternoon. And one more time, I wanted to recognize our summit sponsors, specifically Intel, Wilson Sonsini, the MIT Tech Review, and Lenovo. And special thanks again to Intel for also being our golf sponsor. For those of you who just joined, if you're going to be on social media tweeting about the event, feel free to use our hashtag and social media handles. And we're now going to kick off the final segment of our program with 3 more fascinating sessions to follow. Following which, of course, will be our closing cocktail reception, which nobody here wants to miss. And I now have the pleasure of inviting here another one of my colleagues at Sapphire Ventures, Jay Das. For those of you that don't know Jay, he is one of the MDs here at Sapphire and also one of the founding partners of the firm. Some of Jay's companies that have gone public in recent times include the likes of Nutanix, Box, Apogee, and Square. Over the next few minutes, Jay will give you a quick snapshot of recent trends in venture capital investing and also talk a little bit about venture-backed technologies that we believe stand to reshape the future of customer experiences. Jay, over to you.
Hey guys, good afternoon. I've been told that my job is really to wake you guys up. We've been here since 7:30. So I'll try to do that. I don't know if the data is too dry or not. But let's start with some of the data that we see of the amount of funds that has been raised in 2015 and 2016 and actually 2014. And if you look at it, we are already, this is the data for 2016 up till Q3. Venture firms have already raised about 55 billion. So we think or we predict that it's going to be a higher amount of capital raised this year. But one of the interesting things is that the number of firms raising funds the same as has gone down, which is really points to the fact that most funds are raising bigger and bigger, bigger kind of rounds. Sorry, and the good example is Sapphire, right? We started with a $350 million fund, and we just raised $1 billion fund couple of months ago. In terms of the investments, the amount of funds going into companies hasn't changed that much if you look at 2014, right? We'd actually beat the 2014 number. 2015 was a little bit of an aberration because a lot of firms that were not your typical venture firms like hedge funds and mutual funds all had invested in these companies. So in 2016, we are probably going to end up investing in companies about, I would say anywhere between 95 billion. But one of the things is the number of companies that are getting funded is a lot lower. And then the reason is what we are seeing is that there has been a rush to quality. People who are doing really well, growing at 80, 90%, not burning a lot of capital, are getting funded a lot easier than companies who are not doing as well. And we see this in our portfolio also. And of course, one of the things that has happened this year is none of the mutual funds or the hedge funds are actually investing in the later stage that they were doing in later part of 2014 and most of 2015. Corporations still play a big role. If you look at it, about a third of all investments in the financings, third of the financings are done by corporations, and we see that in most of our financings that we lead. We see actually 1 or 2 strategics come in. And one of the reasons why a lot of you guys are here is because for the CIOs and for all these big corporations, innovation is key. And all the corporations have realized that they need to kind of get access to these innovative companies and also sometimes make strategic bets in an areas where they might not be able to enter themselves. And so, so corporations, I don't think they're going to go away. And the other thing that has happened over time is that, people who are more financially oriented investors, they have realized that corporations can actually play a good part for their portfolio companies. They sometimes have issues also, because sometimes corporations can't always invest or in rounds that are not, conducive to the, the financing going on, or sometimes, if it's not very strategic, they might not participate. But I think the financial investors have figured out how to work closely with corporations and vice versa. And so I think corporations will play a fairly major role in all financings going forward. We've been talking a lot about customer experience. I guess this this summit is focused on customer experience. And if you look at it, VCs have been funding customer experience disruptors for decades now, right? And Sapphire has been lucky to fund some of the companies like the customer system of records. We're an investor in LinkedIn. In marketing and ad tech, we had a great exit in Crux that sold to Salesforce. And in marketing and ad tech, what we are seeing is that the personalization is all getting more and more targeted. George and Steve are just talking about that, and we had another panel on personalization. But that is becoming very key because everybody who's trying to get to their customers wants to target their offering exactly the way they would prefer and would make it easier or more easy for them to purchase, right? There are a bunch of commerce platforms out there, including Hybris that SAP bought and is doing really well. And then on customer service, it's interesting. We put Facebook in this because Facebook is becoming and Twitter is becoming a big channel for customer service for a lot of companies. So let's talk about what are the things that will shape customer experience in the next maybe 5-6 years, right? So one of the things that we talked a lot about is AI. I think there were like 2 or 3 panels talking about machine learning and AI. It is already being used, right? People talk about Amazon Echo. Siri, right, is a great example. My kids use Siri for everything, and they use Echo to kind of make fun of each other. So that is already being used, but you have companies like Lattice Engines, right? You have companies like Narrative Science and Clarify who are here, who are all using artificial intelligence, whether it's machine learning or deep learning to get a better user interface. And I think one of the things you will see is the large vendors are not sitting still. Like about 130 AI companies have already been bought. And there is like a tsunami of these companies getting bought by the big vendors. Now, what comes out on the other end is going to take a while. But for CIOs, I think one of the things is that they don't have to depend just on startups, although we would prefer that's the case. But large vendors are also going to build in artificial intelligence and machine learning into their offerings. We've talked a lot about this hyper-personalization. One of the key things we notice is the B2C guys have figured this out fairly well. But one of the things that B2B enterprises hasn't done very well is how to go after in an account the specific person who would actually buy the offering. Because people talk about line of business a lot, but it's still hard to figure out who within the organization and who in the line of business is actually the purchaser and can purchase, right? But one thing that B2B companies have done fairly well is that they have actually built good system of records. Like if you look at it, they have figured these things out thanks to Salesforce partly. And B2C enterprises are trying to figure these things out. Like Fumi was talking about last night, where that she wanted to sell somebody a pair of shoes in San Francisco who had bought a pair of, a jacket in Hong Kong. And to kind of make that connection is a lot harder for B2C companies, but there is a lot of work, a lot of companies working on that, including some of our portfolio companies that are providing these kind of functionalities. One of the other things is you see the streaming web. You see Twilio, done fabulously. There are a bunch of companies out there providing real-time streaming data. And one of the things that has happened also, if you look at it, like there is no application now that works in isolation, right? If you look at, somebody mentioned Uber. Uber really was made out of, using SendGrid, using Twilio, using, some other services, and they wrap it all together. And that's basically what we are seeing, is that applications are really becoming networked, and they connect through APIs. And the other thing is that everybody talks about real time, right? It's like if you're in ad tech, you know that if you don't make an offer within a few seconds, or when people have an intent to purchase, they're not going to purchase that element. And those same things happen in B2B enterprises also. And people are really thinking about how to use real time, and data streams to kind of get to customers as quickly as possible. And then we have to talk about customer data, how you defend the customer data. We always tell some of our portfolio companies that it's not if, but when you will get hacked, and that your customer data is going to show up in the dark web, their credit cards, everything. So people are figuring out contingency plans to how do you protect yourselves, what do you do when you have a data breach. But I think one of the other interesting things that people have started doing is really looking at cyber risk or cybersecurity and try to estimate the risk just like they estimate risk in your supply chain. Right? People quantify that, or if you're an insurance company, you try to estimate the risk of what's the likelihood of somebody falling sick and things like that. I think enterprises will really have to figure out how they estimate the risk of what happens when they're hit by some kind of a Trojan horse or something like that. So that's it. I don't know if I don't think we have that much time, but if there's any questions, I'm happy to answer.